Budget 2024-25 has brought many changes in our personal finance, as well as focused on the country's overall growth. The Finance Minister, Ms. Nirmala Sitharaman, presented her 7th consecutive budget on 23rd July, setting a record as the first Finance Minister to do 7 consecutive budgets so far. The budget highlighted the roadmap of the Modi's government agenda for India's economic development, which is the Viksit Bharat 2047, and largely focused on an inclusive growth, at the same time continuing on the fiscal prudence path. Let's deep dive into the key highlights from the budget 24-25. Hi, I'm Siddhartha Khemka, Head Retail Research at Motilal Oswal. The budget emphasized on employment and skilling as the key themes apart from the Modi government's usual focus on infrastructure. The Finance Minister outlined 9 priorities for the Viksit Bharat 2047 goal, which includes productivity, employment, social justice, urban development, energy security, infrastructure, innovation, and reforms. A record payout from the central bank provided ample resource to the government to increase spending without widening its fiscal deficit. The government has set a fiscal deficit target of 4.9% of GDP for FY24, which is a cut from 5.1% set in the interim budget. It further aims to reduce it to 4.5% of GDP in FY26. The budget unveiled a $24 billion package, which includes measures aimed at employment-linked schemes for youth and women. Also introduced new tax slabs under the new scheme for lower income earners. Some of the key spendings include a 2 lakh crore spending for job creation, 10 lakh crore for urban housing, and around 1.5 lakh crore for agriculture. The government aims to allocate around 1.5 lakh for education and skill development, which would create around 8 million non-farm jobs annually until 2036. Furthermore, the budget maintained its focus on capital expenditure with a 17.1% increase over the previous year and plans to spend around 11.11 lakh crore in FY25. In a surprising move, the government increased long-term capital gains tax from 10% to 12.5% and short-term capital gain taxes from around 15% to 20%. The government also raised the securities transaction tax on the derivatives segment, that is the futures and options segment. This, we believe, is in line with the government's stated intention over the past few weeks to curb excess speculation in F&O trading, especially by retail investors. We believe that while these measures could be sentimentally negative for the market in the near term, we believe the overall attractiveness of Indian equities for long-term investors continues to remain strong given the healthy domestic fundamentals and the strong economic growth expected in the next few years. Overall, in summary, the Union Budget 2024-25 presents a comprehensive inclusive growth package. The government's focus continues to remain on job creation, enhancing infrastructure and boosting manufacturing ecosystem, including renewable energy and several other emerging key sectors. Key focus area includes rural housing, manufacturing, higher capital expenditure, infrastructure development, defense and power. We believe the budget positive outlook extends to few other sectors such as jewelry, FMCG, capital goods, housing, two-wheelers, railways, as well as defense stocks. For more such insightful videos, stay tuned on Research 360.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.